Hello everyone, welcome to the Elliott Wave Forecast.com YouTube channel. My name is Henry Lau and today is Wednesday, February the 20th, 2019 and the time is around 4:45 a.m. GMT. Alright, so for today we will update where gold is and again we've been talking about gold for a while here if you look at the past YouTube videos, and I've been showing at one of the videos I believe or two, this chart here showing that gold has broken above this what looks like a bearish channel that starts from September 5th 2011 high. You can see in the break over here, and I said at that time that if we do get a decisive break and close above it, gold has a chance to quickly go up and retest the previous high. So we got a lot of clusters of resistance somewhere around 1360 and 1370 here. This is a cluster of resistance in the past, let's say 5 years, and we will retest that again. Now the current price development has been encouraging because it shows us that it has finally been able to break out of this multi-year consolidation, if you want to call it that way. If I draw it like this, you can see it has been consolidating in a big range for many years, right? And also it has been able to sort of close above this 2015 low, ascending trend line again after briefly breaking below it. So it has been able to close above it and then retest, holds, and then rally again. So now this 1360, 1370 definitely is the most obvious target on the upside in the current rally, right? And I also show in the past this chart over here. This one is showing to you, this is a weekly chart, how it has what looks to be a rounding bottom formation, inverse head and shoulders, a complex one. And if we do get at some point a break, a decisive break above all these 1360, 1370 clusters, then we could potentially again accelerate again to the upside. And if you measure the distance between the neckline to the head and then project it from the point of the breakout, you will get a target around 1700 to the upside, or at the least you can see that there is a clusters of support here as well, horizontal support, and it can also go to this area, okay, around 1550, regardless whichever the level, 1500 or 1700. You can see if it does break above it, then that implies a pretty sizable move to the upside in gold. Alright, so now if let me show you a couple of other charts here, and then we will take a look at the shorter cycle. If you look at this chart, this is a weekly chart of gold against the world currency unit, right? WOCU. Now the world currency unit is a weighted basket of currencies in the 20 most advanced economies in the world, right? So this is, you can call it like a world currency, is a weighted basket. Now you can see if you start counting from the 2013 low, when it made that low here, you can see that this is looking like a WXY. So this is 1 2 3 4 5 6 7, so it is a corrective structure, right? And it the W, and then you get this pullback which is supposed to be correcting this whole thing. So you got your X here, and then you have another leg on the upside. Now currently it is about to break above the July 2016 high. It's very close, then I think it will. And if it does break above it, that will suggest you have opened up more upside, and potentially then you can target somewhere around 1021 over here, right, as your next target on the upside. All right, now this may or may not happen, but the idea is, I mean, this pullback may or may not happen, this dip or not. I mean, it can be doing let's say an impulse, 1 2 3 4 5, in which case then you would expect more upside if that is the case, right? But the idea is that if it does break above the 2016 high, then that means you will see more upside in gold, at least reaching to 1021, 1100. Again, the idea is that this chart here is telling us gold is not only strong against US dollars, which is only one currency that people usually associate gold with, but gold is strong against every single world currency out there. Okay, so a break above this is going again giving us the support for more upside in gold this year. Now let's move on now and take a look at the shorter cycle. This is the shorter cycle here. Now you can see, of course, in the 1 hour you do not see every single count. If you want to see a full complete count, I would encourage you to check out our full count in all time frames in the member area. Now we do over 14 days free trial. You can always try our service and see if it helps you, and the link to the trial is provided in the description. Now here in the 1 hour, all right, which you do not see a full count, but we can look at the larger time frame as well a little bit. This is the larger time frame. You can see the rally that starts from August 2018. This looks like an impulse, and currently there's a couple of different interpretations. Definitely it could be currently like this. So you can see that this wave 1 here, this wave 1 is measured starting from here. So you got this 1 2, and then now we are in the wave 3. So regardless how you count this, okay, regardless how you count this, it will imply that more upside still can be seen, right? Now there are a couple of other alternates here. So in this count here, what we are suggesting here is that we are still within wave 5 as of 5 waves, and that will only end with 3. But of course, you can always play a little bit. So we can be doing this, and we could be in the last leg in the wave 5 now, which is also a possibility, right? Which is also a possibility. So the idea here is to to look at the broader picture, to look at the overall idea, and expecting that we should be ending, more likely than not, this 5 waves somewhere around the previous high. So around 1360, maybe it breaks above it a little bit, all right, slightly breaking above it, let's say targeting 1360 to 1400. That will be in the next sort of area that we could likely end this 5 ways up. Now again, the specific count always can change. Like I said, we could be still only with 5, with another 4 and 5 to come, right? Let's say to 1400, or we could be already within the wave 5, and if that's the case, then we can get a little bit more upside to retest this 1360, then end the whole 5 waves and start, you know, perhaps a little bit bigger pullback. All right, but the bottom line here is that the overall picture seems to suggest more upside is in store for us in gold. It's just that in the shorter cycle, due to the impulsive structure of the rally here, we need to be a bit careful, especially when since gold is kind of approaching last year's high at 1360s, right? There is a potential, again, like I said, that we can be ending the cycle that starts from last year somewhere around the area between 1360 to 1400. All right. In the meantime, though, as far as we have not reached the 1360, there is still a likelihood that gold still can extend higher in the shorter cycle, right? At least to retest 1360. And again, if this is a 1, 2, 3, then you should be expecting any pullback to continue to find support in 3, 7, 11 swing, right? In 3, 7, 11 swing, any pullback should find support and extend higher again. All right, so for example, this one could have ended 5, could have ended 3 here at the highs, and then start to find buyers again if you see a 3 swings pullback here, for example, from the peak. All right, so hope that you enjoyed the video, and see you all again tomorrow. Have a nice day, everyone.